Welcome to TradeTheMBI.com. This is John. This report is for the 11th of December and the continuation of making new lows, but this time they got bought back up. Now we're still in the continuation from a DOC here of the sell signal as it took place with our little cyan breakup here with the lovely cross of green below. Cyan goes above. Didn't quite get the steel all the way below cyan, which is the ideal spot, which actually took place like right over here where we ended up having that big down day. At this particular point, they still keep buying up, but making a new low, never a super great thing. However, we hit the key levels we were looking at were around the 2600, bounced up above that, and the next one became the 2635, which we're just below right now, and that becomes a huge pivot point. Below that, is definitely much more bearish than being above it. You actually can expect to move closer towards that 23%. A little bit of a flattening of the green. That's not really going to give a turnaround just yet. You would need to see orange continuing its slide down. It's possible to happen if we get a nice bounce up, but this particular point still have falling shakeout. So, but we're not below the red line, so that doesn't require any retrace of those lows. However, not exactly hyper bullish or even bullish for that matter, so not surprising to see what we're facing. Interesting though, when you look at this, the NQ not making new lows, so not corresponding, so much stronger from a NASDAQ standpoint than the S&P at this particular point. So the flight to technology is sort of there. Euro holding right in the middle range here, despite the fact that we get a little bit of a bearish snake spread. Green -5 to the -548, so slightly above red, which is enough to give it support, so to speak. And of course, the continued flight to quality is the debate between what the Fed plans to do. I mean, it's always been my impression that they're purposely trying to thwart the growth issue by raising rates, because there still is no real justification for the raising of rates other than wanting to liquidate their balance sheet, which isn't going to happen. Obviously, with deficits rising dramatically, given the spending, they're thinking, okay, this gives them some latitude to reduce rates, should things turn south quickly or whatever. But they're doing their best to make that happen. So we'll see if they're successful. Oil, no rebound in sight yet. It's improvement for the shakeout here. So with these steps of the orange below, you need to see some retrace of the steel to try and give it some movement. In fact, we got a new split between the cyan and green, suggesting that it's still problematic as far as a buy standpoint at that level. And gold becoming a real defensive play as it broke out above the highs, though you expect those to get retraced back in. It's a matter of letting the ABM catch up to it. So from an intraday standpoint, we started off with a nice little pump that happened, and then we ended up with the classic signals right here. So this is that crossing of the steel below. At the same time, it crosses orange, and then obviously green from above comes below. Ideally, you want to see the green dip below red, but when you have it up at a point where you've got a series of positive extremes to fill in, taking the opportunity on that and just seeing if the momentum carries itself through, which in this case it did. And we got right to the 50% and produced the new buy setup, which brought us right back up, still below where the ultimate signal was. And then we ended up with pretty much an exact replica right here. This time green was below red. Steel crosses both cyan and orange at the same time, and you got a much bigger decline on that one. That was a really nice trade there from 33, and we went all the way down to the lows at 09. So that was excellent from that standpoint. Even when it produced this, you knew you still had to get the second pivot, produced a much better buy from that standpoint. And even still, this is something I talk about where buys are a little bit tougher in some cases unless you get a super strong momentum. Typically, they'll rise up, reach a point, and then they do their 50% retrace before another leg. So it's that A, B, C kind of effect that you typically see. And again, marking the exact Similar confab here. Again, this one you have green below red. It was the rejection of the cyan and green right there, and orange was already above, so you had the stronger. So in this particular case, while you didn't have the green crossing below orange, you had the meeting of cyan and green, and that rejection oftentimes leads to the beginning. And the fact that you're below 50% with the gold, and boom, that another awesome trade here from 24, and it just kept cascading all the way down to 83. So beautiful run. And then that's when things started to consolidate right around here. You got a big series right between that 0 and 23% as we started to get steady incline, and then the shakeout moved above the negative 13 right in this range and actually produced gold there. It did make the lows, but continued to build, and that led to a nice rise where we produced what, again, the exact same configuration of that steel cross. Boom. Now this case lasted for a little bit longer, and then you ended up with just the full DOC spread, and that produced the dip that came a little bit further. Again, same configuration here, did the exact same thing, rebounded pretty quick on this one. And that can happen, just depends on if you get a continuation. The fact that you had steel coming below and then crossing back above, that's that warning that your short run could be ending, and then boom, when it finally crossed above the orange right here, you were still at 50%, but that was the precursor to that final, and you got a P3, which is the much higher pivot of the red DOC, which indicated that you had long-term buyers really starting to pump back into that. And then you produced some, big rising moves that occurred the same way. The problem, the reason I marked this one a little bit different is to let you know is that in that first rise, when you don't have that steel crossing as well, even though it rejected, it produces a little bit, but you've got to understand that those aren't going to give you your full ranges. There's a line I should mark right here, which is this positive extreme right there. Put that one in there, right down at that similar 26 to the daily, which is interesting. And then so further along, again, same situation in this case, the DOC spread, the rejection difference again here. You have the steel coming from lower, and so it didn't take long for it to scoot back up above. And that's just something that when you have the reset of the steel, you have to watch for. When they're coming from above, you get a little bit cleaner action on the move. And then like particularly here, where crosses rejection of the cyan to the green and the steel crossing orange and all that all at the same time, and it produces a bit more of a downdraft. In this particular case, it was a nice, decent move. I think it was good 8 points, because I remember this one taking place. So it was 26 and dropped all the way to 20, and then immediately popped right back up, all within one fell swoop. And that led to a series of just bouncing back and forth with more buy configurations, again getting overbought, producing positive extremes, as you can see just by looking at towards the end here, filled back in place in the post market, which is what we're looking at right now. So those positive extremes all got filled from this level, and it's still, that's why I leave those there, because we tend to see that those become the support in this case. Rising 23%, but we had this previous algo at the 26, 28 and 3/4 from before, and that's exactly what it hit to. So little softness in the pre-market action as we speak, but all in all, good trade action overall. It just was interesting with the liquidity, because in some cases when you had some of these big bounce moves, it was just literally that the bids in that were being pulled and price just elevated, or in this case of some of the drops, same thing. You had low action, and of course with the option expiration coming up here soon, you got to be ready for that one as well, and it's going to be the rollover into the new contract. So be aware of that. As always though, trade well. I'll keep putting up anything relevant. There really wasn't anything super special. These were all just pretty much same buy and sell configurations that we've been talking about for quite a while, and they've proved to be quite nice. So it's just a matter of sticking with them and following what the readings are. As always, trade well. We'll talk again later.